What's up, everybody? On my daily recaps that I post every day, I go over any supply zones, any demand zones that have formed recently, and any plays that I trade off of it. That's the only strategy that I trade. But today I wanted to basically boil it down to the basics, give you different types of demand and supply formations, how they form, what they look like. And it really comes down to three different formations. You have a rally candle, you can have a basing candle, and you can have a drop candle. And so there are four different types of demand and supply formations based off of these three candles: rally, base, drop, right? So the first formation is going to be a demand formation. You have a rally, base, and a rally. This is where institutional buyers and sellers are loading up, and typically most of their orders will not get filled, right? So it'll come out of it. They still have their orders left open, and then when it comes back and tests it, it should bounce back out of it, depending on how strong the demand zone is and other factors. But typically, it will work. Once it gets down to the zone, analyze a little bit, see if it looks strong, and you can play it long. So rally, base, rally. A good example here is this on the 2-hour chart. You have a rally. Here's your basing candle, and then a rally, right? Typically, you want to see on this formation, on every formation really, but on the rally candle, you want it to be green. On the basing candle, ideally, you want it to be a red basing candle. Then, of course, a next candle is going to be another green rally. Rally, base, rally, right? So I'll write this here. Rally, base, rally, demand. All right. Next thing you can have, I'm going to stick with the demand here. So anything that ends in a rally is going to be demand. So next thing you have is a drop, basing, and a rally. It's the same thing. We get a drop before, but then institutional buyers and sellers, they like this price. They think it's going to go up from here, or they know it's going to go up from here. And so they start putting in their orders, and it rallies out of it. Next time it comes down and tests this area, it should bounce again. So drop, base, rally, and that's going to be another demand zone. Let's see. DBR demand. All right. So these are the only two demand zones that can form: rally, base, rally, drop, base, rally. Now let's go to the supply side. Anything that ends in a drop is going to be supply. You can have a drop, base, drop. I'm actually going to make these red. So drop, base, drop. The base obviously doesn't have to be perfect. It can be slightly downward, slightly upward. You can tell when a candle is going to be a basing candle, and I'll give some examples of all four of these here in a bit. Drop, base, drop. Same thing. Institutional buyers and sellers have sell orders here, and then when it drops out of it, that is confirmed. When it comes back and tests this level, it should bounce back down out of it, and you can get a pretty good short position out of it. So write that down. Drop, base, drop. Supply. And then last formation is going to be a rally, base, drop. Right? Rally, base, institutional buyers and sellers not liking the price, drops out of it. Orders aren't all 100% completely filled. Next time it comes back into that area, you should be able to get a pretty good short position off of it. All right. Rally, base, drop. Ends in a D, right? Ends in a drop. It's going to be supply. So these are your four formations. Anytime everybody talks about demand or supply, it's either one of these four. There's only two formations on the demand side, two formations on the supply side. All right, so I got four good examples for us here. This is a good 4-hour demand zone from a few weeks ago. You got drop, a big drop. I mean, this is about a couple hundred points here. Drop, good basing, right? Institutional buyers and sellers decided they like this price. We're going to go ahead and load up here, and it rips right out of it. Especially when it's a violent move like this, you know there should be a lot of orders that did not get filled. Next time it comes down and touches this area, we should get a pretty good bounce. Almost touched it here, good bounce. Then we finally touch it, and this was the start of an uptrend that went up to, I believe, 4,600. But yeah, good dip here, good drop in the demand zone, rallied right out of it. And this is your drop-based rally. All right, next we have a base rally, another demand zone. Bear with the scrolling here. I'm going to see if I can find it on the 5-minute chart. All right, here we go. Rally, base, rally on the 2-hour. On the 5-minute chart, obviously it's going to look a little different. There are different demand zone formations, depending on the time frame that you're using. Okay. Here's our zone. We got one touch out of it. The second time it fell right through. That's why ideally you only want to play fresh zones that have only been touched. The second time, it's possible that all these buy orders that were left here were already filled, and that is what happened. Got a good touch out of it, and a good rally. It rallied about close to 30 points, and nobody can complain about that. Next time it came back down, it fell through, but it's another good demand zone. Now on the supply side, all right, we have a 2-hour rally, base dropped out of it. These zones don't have to be perfect. It doesn't look as good as the other two, but this is a rally base drop. And right when this formed, we actually touched it a couple hours later in the open, or after the open bell. Bear with the scrolling. Let me see if I can find it. All right, here was the creation on a 5-minute chart. Dropped a little bit. Now at the open bell, we're coming back in. We're testing it. One test, couple tests here. Made a lower high and then dropped. This dropped about 20 points. And then last supply zone is going to be a drop-based drop. Ends in D, ends in drop. It's going to be a supply zone. Good drop here. Good base here, then a hard drop, and we got a couple rejections off of it. Let me find it on the 5-minute chart. All right. So this one didn't get touched until a couple days later. Got a perfect touch here towards the end of the bell, end of the day, sold off. Got a great touch here, sold off, about 20 points. Then almost touch it here the next day before it sold off a little bit harder. And so that's what it boils down to. It's just four formations. Once you take it down to an easier lever and break it down, it's easier to identify these zones, easier to play off of it. This is what I trade off of every day. I only trade off of the supply and demand zones, or supply and demand strategies. So if you want to look at my recaps, you can see these being made in real time. You can see which trades I took off of it and why I took off of it, and I'll explain it there. But I hope this video helped, and I hope to see you guys in my recaps.